Hey, what's going on? Today's Friday, the 10th of January, 2025, and the market is finally selling off here. We are down currently 1.7% approximately, which is good. I got lots of hedges in place right now, and I'll probably sell a put spread in SPX. And I don't really believe in technical analysis, but it's fun to draw some lines. So there's this long channel here. The biggest drawdown we've had was 9.7% way back here in July of 24. And yeah, we are approaching the edge of this. So I don't know, maybe we'll bounce here and continue higher. I hope we get a bigger correction because the market basically has just gone straight up for 2 years. One thing here is there's a RSI divergence here, like this was the high, and for the last, that's in July, so last 6 months, the market's continuing to make higher highs, right? But the RSI is losing momentum, and yeah, so who knows? Maybe this is finally tipping over here, and we'll see a sell-off on the daily chart. If you look at the hour chart, surprisingly, even with this sell-off, we are not even oversold on the RSI. But again, there's probably going to be a bounce here just because everybody watches these same channels, and I swear this stuff is like a self-fulfilling prophecy most of the time. So probably be a little bounce here, and then who knows? Maybe that'll be the bottom, and we'll just go back up, make a new all-time high, or it just kind of consolidates and then sells off. But anyways, back to Tasty Trade. The defined risk account here probably has the worst position. It's an SPX, and I have this put spread that I sold just like not even a week ago, and it's already in the money. I don't understand right now SPX. All the risk is you get more premium to the upside than the downside, and I would figure the downside would almost always have more risk to it. If you go to like the delta, 30 delta is usually where I go. 115, right, at the first 30 delta. But then you come to the call side and you go first 30 delta. We're up at 170, 175, 180. I don't know. To me, it seems like, I guess I have no idea, man. The market has been overbought for months. It seems like the downside risk is always higher. But anyways, guess my point is I feel like I should be getting paid more to take downside risk when the market is clearly weakening and potentially rolling over. I come here to the 30 delta, give or take. Guess I'm going to go with this first 30 delta. It's now 31 delta, 66%. If I go 30-30, that's 110. Whatever, man. Sure, let's do it. All right, well, you can tell I don't plan these out very well because I forgot to turn on privacy mode before I started trading. So sorry, I'm all over the place. All right, so trying to get about 110 here. 30 delta, 29 delta. Oh, it just jumped to 120. Man, it's all over the place. Anyways, I don't want the Sweet Bobby hedge account. I want the defined risk. And I didn't describe the defined risk account. It's basically just, I'm just basically going long on the market. And yeah, that's about it. I'm not really following any kind of Tasty Trade or anybody's system, except the only thing I will follow is rolling or closing. I don't really roll positions, but I'll close positions at 21 days to expiration, DTE. So that's it. Just going long market. So, you know, market's down 1.5%. I'm going to sell some puts, or a put spread. So here we go. All right, so that got filled at 105, I think. Come here, yep, 105. Here is my spreadsheet. Come down here, make a new row, SPX, do one contract at 105. Fee's always the same. I guess I could just redo that so it's automatically fills it in. Well, it's at 29.29 now, but it was 30.29 and 66%, I think. 30.29, 66. VX futures 19.2, and then the IV rank is 29.7, and then the price is approximately 58.22 point, I don't know, it was like at 80. All right, so SPX, this is number 3, 56.65, 56.60, short put spread. Expiration is 2/21, 41 days. Opened it on 110. All right, there you go. So come here. This is number 3. And on that note, I have this put spread here that is way in the money. And then, well, how far in the money is it? 50. Oh yeah, it's like 50 points, 60 points in the money. Anyways, I entered these separately. This is where I'm not following like Tasty trade. These are 2 different trades. So this call one is 61.5%, so I'm taking it off right now. There we go, 55. 55. So call spread, that was that one. 61.25 call spread. Yep, that's it. So that's minus 55, not 0.55. Fees, I forget what the fees are. I'll look those up in a second. VX close is 19.1. IV rank 29.7. 58.26. 58.27. 58.27. We'll just call it. And it's a winner. Oops. Winner. Chicken dinner. All right, so I guess to recap that, open VX, the VIX futures increased about 3 points. IV rank went from 16 to almost 30. But the big thing with the spreads is that the price went in my favor. And yeah, SPX dropped 114 points. So that's mainly why I won on that short call spread. And oh yeah, close this today at 110. Wow, was that really only 7 days? That's crazy. There's that one, SPX, 7 days. Give me this. Call spread is 61.25. Oh yeah, this one here was February 7th, or not February 7th, on 1/3. Yeah, and today's 1/10. Crazy. That's a nice, quick and easy winner for once. Holy cow. All right, so that leaves me with number 2 and number 3, which is right here. Number 2, number 3, both short put spreads. Number 2 has 7 days until I'm going to close that puppy, probably for a loser. I can't imagine we're going to get a huge rally here, but you never know. Nobody knows a damn thing, that's for sure. What else? Oh, I was going to look up the fees. The fees today, minus 154 to close that out. All right, so after fees, I made $69.92 on that short call spread, which was 57.7% pre-fee of the max profit. I'll take it. And the rest of this, I don't think I'm doing anything else. Yeah, all these accounts are pretty low buying power, so I can't really do much else. You know, these Sweet Bobby hedges are working for the most part, I guess, right now. I mean, total open, I'm down 650. The short put spread that I open, or not put spread, just the short puts that I sold against the hedges, you know, they're down 30%, but, you know, at this point, in theory, all of this is like hedged off, right? So come here to the blue. No, it includes the working orders. Whatever. Go down 20%. No, even with the working orders, 20%. You know, way down here, well, what's more realistic? If IV increases 20% and we go down 4%, I'd be up $226. Or if it goes 20 points, it'd be $285 profit. So yeah, that's hedged off, and that even includes all the working orders. So yeah, I'm not going to touch anything there. I mean, if the market totally takes a dump, you know, I could make $666 if it went down, if IV increases by 20 points and we sell off 20%. Not too much of a reward, but well, I mean, I guess it kind of is, because that whole account's only $500 or whatever. So I'd double the account there. So anyways, just rambling. So that's it. Nothing else needs to be touched. Have a good weekend, and I'll see you next week.